Well, welcome everybody. Gary Becker and I will be presenting two topics during the next 50 minutes. The first one, which I will present, will be about record-keeping best practices. The second one will be about federal taxes, what they are, and how to record them, and how to pay them. But first, let's move on and talk about record-keeping best practices for a small business that's just starting up. So our objectives for this section is really how best to keep track of your business's finances. And secondly, once you are keeping track of those, how to maintain your business records and documents in the event of an audit. Okay, this is a little bit about myself. What you see on the bottom of this slide is what I did during my professional life, but what is more important is what I've been doing during the last 11 years, which is volunteering for an organization called SCORE, and really focusing on helping SCORE in two different ways. One is doing small business owner mentoring services with an expertise in finance, accounting, and taxes. And then secondly, to present a number of different SCORE-hosted workshops, some involving accounting, some involving financial projections, and some involving taxes. Okay. This is a little bit about SCORE, so let me just spend a minute on this. If you don't know about SCORE, well, SCORE is a national not-for-profit organization with about 10,000 volunteers and over 300 chapters, pretty much one in every major city in the United States. We have a very active chapter called the Greater Seattle chapter here in Seattle with about 100 volunteers with a variety of different backgrounds and expertises. And we really provide services to small business owners through three ways. The first is one-on-one small business owner mentoring. So if you don't have a mentor, I would urge you to get one. It's very easy to do. All you need to do is access that website on this slide, and in a couple of days thereafter, you'll get yourself a mentor to meet with. And it's absolutely free, no charge whatsoever. The second is we host about 12 to 15 different workshops per month, and you can see our calendar for the upcoming months on that website that's listed at the bottom of this slide. And then thirdly, we have a number of different resources, webinars on demand, and the like that you can pull off of our website and off of the SBA's website. So we're really here to help small business owners get started and help them along the way to making sure that, or to helping them have a very profitable business. This is our agenda here today, really matching the objectives that I laid out on the previous slides. So as we're going along this presentation and the one that's going to follow by my colleague Gary, I urge you to ask questions as we go along, and you can do that using the chat icon on your screen. And during the course of the next 60 minutes, Gary and I will be answering those questions that you are posing in the chat box. I also urge you to download the presentation so you have a record of what we talked about here today, because there's a number of different items on there that I think you may want to refer to in the future. So let's start off with talking about keeping track of your business's finances. So I oftentimes get a question as to, when does a business start? Well, a business really starts when you decide that you want to start a business, a recurring business for profit, and a transaction occurs, either that you receive money for your products or services, or you pay money in exchange for some type of product or service. That is when a business starts. It's not when you get a business license. It's not when you create an LLC. It's really when you have your first transaction for your business and you have also made a decision you want to start a business for profit that's going to be recurring in the future. Now, there's some basic rules for financial record keeping, and we're going to go through each of these. And the first one is really separate your business's checking and savings accounts and other business or other financial accounts from your personal. The second being have an appropriate accounting systems for your business, and make sure thirdly, you have somebody that you can lean on in the future to give you help. Okay. Now, first of all, let's talk about separating your finances and accounts. And why do this? Well, first of all, if you set up an LLC for your business, and I would urge you to do so because it's a really good idea, you are required by Washington state statutes to separate your business's finances from your personal finances. So there's a requirement, a legal requirement. Secondly, it just makes good sense for record keeping and your accounting. And thirdly, based upon how much money is in your financial accounts, you can intuitively tell how your business is financially growing. Is your accounts increasing or are they decreasing? And thirdly, you really want to separate your personal life from your business life as it pertains to your social media accounts. So the question is, what accounts should you have for your business? Well, if you look at this slide, you'll see that you should pretty much have the same type of banking business accounts as you have for your personal accounts. It's pretty much the same thing. And it's a really good idea when you're first starting out to have your business accounts at the same bank as your personal account, bank or credit union, because it facilitates easy transferring of money from one account to the other. And I think you'll find that to be a big advantage to having all of your accounts at one bank. Okay. Now, again, like I mentioned, you should separate your personal life from your business life. And that's particularly important when it comes to social media accounts because you want to portray your business separately from what you're doing personally. And so, you should really have separate accounts for all of these different types of media of social media, including having a separate email for your business versus your personal email. Okay, really the only one that should be merged that holds both your personal and your business is LinkedIn, which is really more of a business social media account. Now let's switch partially. Now that you've separated your business and personal accounts, let's talk about accounting systems. Well, now, and really an accounting system is how you record your business transactions so you can keep track of how well you're doing, and it facilitates the reporting for federal, Washington, and local taxes. And there's really three different types of categories of accounting systems for a small business. And I'm going to go through each one of these, starting with a manual system. And a manual system, really, when you think about it, is just an Excel spreadsheet or Google Sheets if you use Google Sheets. And what you do is you list your transactions on the rows, and then you for the amounts that you either received or that you paid, you're going to categorize them in some columns that you choose, and you can have a number of different categories. And that way you can, at any particular time, you can add up all of the columns and see how well you're doing. Okay, so that's a simple manual accounting system using Excel. Now, if you think that could work for you, I've got a treat for you. And that treat is I've already created a manual accounting system on Excel for you. And all you need to do if you want this, all you need to do is send me an email at that email that you see at the bottom of the slide and say, Joe, saw you at BizFair doing a presentation, and I'd like to get that manual accounting system on Excel from you. And I will probably send you back an email asking you a couple of questions about your business, and then you'll get that from me. And each year it'll get update. I'll be sending you an update for it, so that you keep so that this works well for you for your federal income tax reporting purposes. How much does it cost? It's absolutely free. So if you want it, write down that email address. Now let's move from manual accounting systems to simple computerized systems for small businesses. And there's really two that I tend to recommend. FreshBooks, which is sort of a simplified version of QuickBooks Online with less functionality. And it's quite good for a service business, but I would not use it for if your business is selling products. It does have a fee associated with it. Another good accounting system is Wave. That is absolutely free. There's no charge at all. And it's not as robust as what you'll see on the next slide for the more comprehensive computerized accounting systems, but it's pretty good. And so if you like the pricing, which is free, you may want to try Wave. And then lastly, there's more comprehensive computer systems. And the two that are the market leaders, and they're quite very good, and they're comparably priced, are QuickBooks Online, which is by far has more users than Xero, and the second one is Xero. They're very comparable in functionality and the like. Oftentimes people choose Xero because it tends to be more user-friendly and intuitive than QuickBooks Online, but both of them are very good. Okay, now you're probably saying, okay, how am I going to go about choosing which is the right accounting system for my small business? Well, there's a number of factors that need to be considered in choosing an accounting system, and I would urge you to have some professional or a SCORE mentor help you choose the right accounting system for you, and taking into account these factors that are listed on this slide here, okay? And I would not urge you to use any friends or your fellow business colleagues for advice on this. Go to a professional who is very familiar with different types of accounting systems and choosing the right one for you, for your business at this particular time. So that's keeping track of your business's finances. Now let's move to maintaining your business records and documents for the future, which is really record retention, okay? And so there's really three questions that are asked when we talk about record retention. And the first one is what to keep. If you look at all of these items on this slide, what you're going to see here is that you need to keep all of your documents pretty much. Anything that relates to a transaction for your business, you need to keep, including your tax returns that you have. Secondly, the question is how to keep them. Well, all taxing authorities within the United States accept either electronic documents or paper documents. So you have a choice of which ones you want. And I would urge you to consider however you want to file your electronic or paper documents, or a combination of both. File them by month, because it'll make it easier for you to refer to them 1 or 2 or 3 years into the future. And lastly, how long should you keep them? And my recommendation is that you keep them 7 years from the date the related federal income tax return is filed, okay? Because that is the longest statute of limitations that the IRS can invoke on any taxpayer in the United States, okay? Which means that for documents for this year, and you'll be filing your tax return next year, you need to keep them until 2030. It's a long time, but if you want to be safe, that's the law, okay? So in summary for this presentation, before I hand it off to Gary, to talk about federal taxes, what we've talked about thus far is separating your personal and business finances. And secondly, we've talked about how to choose an appropriate accounting system. And don't forget to get professional advice on this. And then create a record retention process, because record retention is really a process that maintains your business records and documents appropriately so that you can refer to them in the future, particularly if you get an audit by a taxing authority. And with that, I'd like to turn it over to Gary Becker, who's going to be talking to you about federal taxes. Thank you.